You know that feeling when you finally buy something and the price drops immediately? You buy a new phone. Next day, $200 off. Annoying, right? Now imagine that feeling, but it's your entire investment portfolio. You bought Bitcoin at $104,000. You did the research. Institutions were coming. ETFs launched, big money arrived. And now, Bitcoin just goes sideways. 85,000, 92,000, 98,000, over and over. So you ask the obvious question, why isn't Bitcoin at $150,000 yet, or $200,000? What am I missing? My name is Sam, and I spend way too much time thinking about why prices don't behave the way they're supposed to. If you believe in Bitcoin, but the price action makes zero sense, this video is for you. Because what I found honestly shocked me. I didn't want to make this video because the idea that banks manipulate Bitcoin sounds like a conspiracy. Late-night tweets, zero proof, tinfoil hats. But then I looked at how modern finance actually works, and I realized something important. You don't need crime to control prices. You just need structure. Let me tell you a story that sounds unrelated. In 1982, Mexico borrowed billions of dollars from international banks. Roads, schools, growth. But here was the problem. That debt was in US dollars. Mexico can't print dollars. Then the US raised interest rates. Suddenly, Mexico's payments exploded. They couldn't pay. So the IMF said, we'll help. But the help came with conditions. Sell public companies, cut social spending, open markets. Mexico had to sell pieces of itself to survive. That's called a debt spiral. Here's the key idea. Debt spirals don't just happen to countries, they happen to companies. And right now, there's a company holding over $60 billion worth of Bitcoin. That company is MicroStrategy. Imagine this. You own a house worth $500,000. You borrow $100,000 with a variable interest rate. At first, it's fine. Then, rates go up. Your payment doubles. Your income doesn't. Now you're stressed. You sell early. You refinance badly. Or you lose the house. The bank didn't break the law. They just waited. That's pressure without crime. MicroStrategy used debt to buy Bitcoin. Lots of debt. Convertible bonds, preferred shares. They owe about $700 million a year in interest and dividends. Their software business doesn't earn enough to cover that. So they use cash reserves. Those reserves last less than 2 years. Tick, tick. As long as MicroStrategy's stock trades above the value of its Bitcoin, everything works. They sell shares, buy more Bitcoin, stock goes up. But if the stock drops below that value, they're stuck. They can't raise money, and eventually they might have to sell Bitcoin. If they sell Bitcoin, Bitcoin price drops. If Bitcoin drops, their stock drops. That's the death spiral. So here's the uncomfortable question. Why would banks want MicroStrategy under pressure? Because pressure creates discounts. If MicroStrategy is forced to sell Bitcoin, they don't sell on Coinbase. They sell in block trades. Phone calls, private deals, lower prices. That's how institutions buy Bitcoin cheaper than you ever could. This isn't new. In the early 2000s, hedge funds used similar structures. Companies collapsed, stocks dropped 30% plus on average, almost half disappeared completely. It was legal. It still is. Am I saying there's a secret meeting where banks plot against Bitcoin? No. I'm saying incentives exist. And when incentives exist, pressure follows. First, MicroStrategy is not Bitcoin. Bitcoin doesn't have debt. Bitcoin doesn't have payments due. Second, pressure means someone wants the asset. Institutions don't engineer complexity around things they think are worthless. They engineer it around things they want cheaper. Third, this is a time game. If Bitcoin recovers, the pressure breaks. If MicroStrategy refinances, the theory breaks. If you're scared, that's normal. Volatility is the price of admission. The people who win aren't the ones who panic. They are the ones who understand the game. If this helped you understand why Bitcoin feels stuck, hit subscribe, leave a comment, and most importantly, know what you own, know why you own it, and know when pressure isn't the same as failure. I'll see you in the next video.